Welcome back. You're with money. Traditionally used as a sparkling insurance policy and inflation hedge to be cashed in when needed, gold seems to be losing some of its appeal. But just 2 days before Dhanteras, the government too finally launched its gold-based schemes. In a bid to dampen physical demand for gold, Prime Minister Narendra Modi has unveiled 3 new schemes. Anyone who has the precious metal can now convert their jewellery and other yellow metal assets into interest-bearing deposits, attracting an interest rate of up to 2.5%. The next scheme aims to curb the craze for buying gold as an investment option. Any person like you and me can now choose to buy sovereign gold bonds instead of physical gold and earn an interest of 2.75% per annum. These bonds will have an 8-year tenure with an exit option after 5 years. And for those who still yearn to buy the yellow metal in the physical form, the government will be minting gold coins in the country, which will be available in 3 different denominations of 5, 10 and 20 grams. So Uma, first let me come to you. How are these schemes looking, and would you yourself as an investor look at putting some money into it?
I'm not an investor in gold, so
okay, hypothetically, if you were an
I would
investor.
say, yeah, gold is like that little insurance. It's just to say that if everything goes wrong, if I have to flee the country, for example, I can't carry my passbooks and bonds with me. I have to take something that I can use anywhere in the world. No, I'm just giving you the example of saying you want to keep gold for that ultimate resort, something that you will fall back on if everything goes wrong. I believe that from an investment value for gold should be restricted to that. You see, rest of it is accessorization and expenses.
So maybe 5 to 10% of a portfolio, including the new schemes.
Yes, I would say that your allocation should to gold, you don't overdo it, because it's not a return earning asset. I quite like the idea of the bond that provides interest on gold offered as an alternative. I mean, if you're able to appeal to investors to say that buy this bond instead of buying gold and earn a small interest on it as you stay with it and reap the benefits of gold, I believe it would appeal to a percentage of the population. I quite like that idea.
The percentage that doesn't want to see its gold physically in front of them.
Yes, I do believe that it might appeal to that group. I quite like that idea.
Okay, Gaurav, would you be recommending them to your clients?
Yes, of course these are baby steps, because if I was looking at gold in a portfolio and not from jewelry perspective, my preferences would be gold ETF as one, then the second would be gold mutual funds open-ended scheme, and this would be third probably, because I feel that liquidity could be an issue. While they are going to be traded on stock exchange, that's what has been stated, but it's going to be retail participation because the maximum amount of gold that you can buy. So I'm not sure how many trades will happen. Having said that, I have also been witness to baby steps being taken when gold ETF came in, and the volumes from there to the amount of volumes that happens today. So to that extent, yes, this is a step ahead, maybe a baby step, but I appreciate it. Also with younger generations coming in who want gold from investment perspective and don't have so much of attachment to gold, maybe from consumption, they could be doing it more in a pious manner. So Dhanteras, those 5 coins and you do puja or whatever, so that will happen, and respect that.
I know prices have come down, but 5 gold coins is still an investment. I mean, I'd call it one. I don't know about you.
Just an inheritance, right?
It's just the HNI way of speaking, that's fine. Alright, so Diwali and prosperity are synonymous, and prosperity and gold are synonymous, which is why every Diwali and Dhanteras we see a big rush to buy gold. But has gold now just been relegated to a ceremonial commodity? Has physical gold really lost its glitter? Kishore Narne, Associate Director and Head of Commodity and Currency at Motilal Oswal Commodity Brokers, now joined in for a trend check. Hi Kishore, happy Diwali to you. I hope this year is all that and more, but will it be that? How are gold prices looking to move in the festive season and then on to 2016?
Happy Diwali to you all and the viewers also. I think this festive season, domestic demand for gold, especially in the jewelry segment, has been lackluster till now, and we have been hearing reports from the industry that the demand across jewelry segment is anywhere 15 to 20% lower this season compared to the last year. So I think definitely the price is playing a havoc there, and especially last couple of years where the prices haven't moved. Also, the recent government's news that probably the government will be looking at cutting the import duty in the coming future also will propel some of the buyers to postpone their purchases well into the next year. So I think that would be causing a short-term stress in gold, and on the international markets also the prices are under pressure for the short term as the US readies for its first interest rate hike in many years. So short term doesn't look very attractive, though in domestic markets we are looking somewhere close to 24,500 kind of levels as a very good levels to accumulate for the longer term. So we still believe that if you are looking at a 2 years perspective, still gold is a very good bet to buy on every dip.
Okay, so Kishore, what about other precious metals and say silver for instance? Do you see enough demand?
Silver demand has seen a spike over especially last quarter, especially in Indian terms. We have seen imports almost grown by 200-300% month on month in August, July, August, September quarter. Again, especially propelled by the levels of around 32,000, 34,000 levels were seen then that some of the buyers have shifted to the secondary metal rather than buying gold. But I don't think silver will have any potential to outperform gold at this point of time, because silver being a partially industrial metal and partially precious metal, I think it will have a drag on effect from the weakness in industrial metals, especially non-ferrous metals like copper, nickel and aluminum, zinc. So all these metals continue to be in a bearish tone, and there is no fundamental turnaround in the base metal segment. So that would keep pressure on silver.
All right, Kishore, thanks very much for joining in with your quick take. Let's take a break on that note. Our two experts are here with us. When we return, we'll actually bring you the investment mantras that you just can't ignore in the new year. Stay tuned to Money, Money, Money.